So please, round of applause for our panelists and our moderators, starting with co-founder at Netopia, already seen him today, Felix Crisan. Felix, come and join us. We also have CEO and founder of Max Media, again, we saw her earlier on as a moderator, Jane King, come and join us. Also, managing partner of VD Law Group, Sergiu, Traian and Vasilescu. Partner and co-founder at Deca Advisory, Jean-Paul Tarud-Kuborn. Venture Capital, Caerus, José F. Pereira, and co-founder of BDC Consulting, Mr. Paul Moukhin. Please join us on stage, and the person who will shape this conversation, a healthy way forward with this conversation, portfolio manager at Altana Wealth, Mr. Roland Roventa.
Holding on and spending time with us here. I think we should first begin by introducing ourselves. I'll begin. My name is Roland Roventa. I'm a portfolio manager at London-based hedge fund Altana Wealth. We are the first crypto fund to launch in 2014, and we launched a separate fund which I'm managing last year in June. It was good timing, then FTX fell apart, so it's been an interesting year. How about we begin from you, Jane?
My name is Jane King, and I'm founder and CEO of a company called Max Media. I worked for Bloomberg and CNN before that and launched my own business in 2014. So I do television reports out of the Nasdaq market site in Times Square in New York City. And about 2017, I stumbled into a friend of mine who was involved in digital assets, and I started doing a lot of interviews with companies in crypto, and I saw the whole ICO stage and everything. And really came to appreciate the technology and start to understand it after a while. So my expertise is I get a chance to talk to a lot of people in the industry.
My name is Felix. I'm the co-founder of the biggest payment processor here in Romania called Netopia. And I'm also sort of an investor both on the traditional side. We also run a small VC firm, but also on the digital asset side, where I personally invested in a lot of projects, and I'm in crypto for 12 years already.
Hi everyone. It's working okay. My name is Sergiu Vasilescu. I'm managing partner, co-founder of VD Law Group, which is the leading law firm focused on new and emerging technologies. And we offer to our clients legal services, and with our through our partner José, we also offer them accounting and tax services in this tech and crypto industry. Thank you.
Hi everyone, my name is Jean-Paul Tarud-Kuborn. I'm a partner at Deca Advisory based out of Dubai. We basically specialize in helping companies going through the tokenization process, all the way from security tokens to utility tokens, community tokens, NFTs, helping basically match the business model to the tokenization process. We were among actually one of the very first companies to work on security tokens outside of the United States back in early 2018.
Hello everyone, my name is José Pereira. I'm from Caerus. Our mission is to create more of what matters most. That's culture. We invest in early stage companies that enable the digitization of culture and entertainment, i.e. sports, music, gaming, fashion, art, and we are backed by the NEO protocol.
Hey guys, my name is Paul. I'm a partner in BDC Consulting. I'm providing growth, research, acceleration solution for the startups and capital raising since 2017 for Web3.
That's great. I'm very proud to have such knowledgeable panelists alongside myself. Everyone is working within their specific domain, within their specific niche in the industry, and I think it'll be interesting for the audience to find out more about how you find and where you find opportunity in this market, as the last year or so has been quite eventful, with prices of course crashing in the last year, with the crypto market consolidating. We have seen the FTX collapse, which has rocked the markets, and even more recently we have seen the 18th largest bank in the US, Silicon Valley Bank, collapsing, and Bitcoin picking up with the store of wealth narrative that has been brewing lately. So how do you guys find opportunity in your specific niches?
I can start, and I can tell you that because I'm in crypto for about, as I was saying, 12 years, about 6 years ago I started organizing some meetups, and those meetups were very good from both creating the network as well as finding out about new projects, not necessarily because they were promoted by the people there, but they may be involved. Usually we are talking about programmers, and you find out about new things that are about to launch. And if you take a lot of the big crypto projects today, you will find that there is a Romanian guy at some point in one of the technical teams or in some of the founding teams. So in this respect, this Romanian crypto ecosystem seems to be quite thriving.
I just, since I'm a reporter, this is what my mind goes to. So I did a little research on VC and crypto. So this is all according to PitchBook, and this is globally. So in 2022, 725 of the new VC-funded startups, 138, so that's 19%, were in crypto. There are about 100 million to 200 million crypto wallets in the world, 30 to 40 million active monthly users. These 30 to 40 million wallets hold between $1 trillion and $3 trillion of crypto assets. In addition, 6 million to 10 million people have bought NFTs in the past 2 years, with 30 billion in sales. So that makes NFT consumer adoption the most successful new consumer product since the launch of the smartphone. And relative to the 5 billion people on the internet, crypto is still in the early stages. So I hear that from a lot of the VCs that I talk to, is that there's still a lot of growth ahead in crypto. It's a rocky road. They don't know how to value it. They're a little scared of it, and especially with inflation and a pending recession, but I still think they're very curious about it and looking at opportunities.
Yeah. I think in terms of opportunity and timing, we are at a sweet spot. Pulling a thread on what you said, there's never been as much adoption in a bear market as we have right now. So compared to the cycles in 2014, 2018, we have adoption, we have talent that has moved from Web 2 to Web 3. There is a benefit in terms of valuations. I think they have come to a healthier middle between startups and investors. So yeah, you have adoption, valuations. I was going to say one more. Never mind. So I think that in terms of where the opportunity is at, we think that a lot of the money for the last 8 years has gone to the infrastructure layer, but we haven't yet found an application that has a killer use case for the masses. So it is our belief that the next wave of investment is going to go into these applications. So we're looking at, again, the sports music, gaming, and I think that for the whole industry to pick up in that side, it just takes one application, for example, in gaming, one Web3 Fortnite for the whole wave of gaming to really come to the masses.
I'd like to add to that, actually, to the last two comments, is that it's important also to differentiate the different kinds of investment we're talking about. So you have the security tokens, which are usually done by accredited investors and professional investors. Then you have the masses, basically, who are looking at the next token that is going to do multiples. And then, of course, you have to differentiate also the NFT holders who are looking at something slightly different. So some people are looking for retention of value, some people are looking for multiples. So there's different kinds of investment within this field. And it's very important also to categorize that. And also the assets that are being invested in, basically. So if you're looking at utility tokens or community tokens, you're looking at the masses mostly. Some VCs that are looking at taking some risk in that aspect, but they usually will have a very vast portfolio. Whereas institutional investors are not really keen on in investing in things that they don't understand, as you were just saying right now out of your report. So there's different categories, and it's also important for us as the community to be able to differentiate that and provide information to the potential investors in the different category of investors.
Yeah, and I have to add something here from a lawyer's perspective. I think next year, with having Micah next to us, we'll discover or we'll meet a new type of investors. So having Micah in place or coming, institutional investors will be able to directly invest in this industry. To really invest, because now they are forced to use different techniques and specific SPVs to invest in crypto industry, and we can consider that banks are not investing in crypto industry because you notice that the markets are connected. Why those markets are connected if we consider that institutional investors are out of this, and having MiCA in place will enable them to directly add extra money in this industry. And from the legal perspective, the winning companies will be those who are able to or who will accept to reshape their business in order to really have a utility token and to structure their activity and to be compliant with any local regulation. Imagine that 300 years ago, a guy from China was able to, let's say, lend some funds to an Italian guy without any other rules, but nowadays he must obtain a banking license in every country where he wants to operate. So it's the same in crypto. 3 or 4 years ago, you were able to, let's say, invest in any kind of token to do at least everything that you want, but nowadays you need to respect every country regulation.
Thank you very much, Sergiu. I think some excellent points are being made. Felix is telling us that we should be close to communities, and in crypto it's very important. It's a different asset class, which works differently. In traditional finance, you're mostly on your Bloomberg or looking at news, but in crypto you have the unique opportunity to be within these groups in which you can ask developers anything, you can be really close to the builders, and José himself as a VC investor is looking at themes that will outperform and will revolutionize crypto as we know it. I think we should also discuss a little bit about the different ways to gain exposure within this ecosystem because it's quite diverse. Something that comes into mind is whether you find more opportunity to be deployed in liquid strategies, such as simply buying Bitcoin, buying Ethereum, or you find more opportunity in buying VC projects. At what valuations? Are valuations good enough right now to start deploying in VC? And what other things that you're looking at to deploy your capital right now?
So in terms of valuations, I think that venture capital valuations take a bit longer to adjust to the market. In the liquid strategies, there's 80% down, 90% down, they adjust immediately. The diligence process is completely different. The strategy is short-term and liquid, and venture capital, you normally have a time frame of 5, 6, up to 10 years to exit the investment. So just the perspective that you take is completely different, because in liquid strategies, you're trading momentum, you're trading market behaviors. Crypto markets are irrational. There was this quote of a person that was in the fund, Caerus, and he was telling me, José, he was talking about the liquid strategies. It's like, do you want to be right or do you want to make money? So I think that's something to keep in mind in terms of entering and exiting those liquid positions. I think that those two are the separation between where opportunity is. I think in ways to get exposure as an investor overall, you have Bitcoin, I think, as a proxy of the whole asset class. If you believe the thesis that it's going to be the digital gold, the hedge against other currencies, fiat currencies, then Bitcoin gives you enough exposure. In venture capital, we take outsized risk to outperform all of these assets. So I think Ethereum gives you exposure to all the activity on Ethereum, all layer 2s and the applications on top of that are part of the values accrued at Ethereum. So just with Bitcoin and Ethereum, you can get enough exposure. A hedge against Ethereum being the dominant ecosystem would be investing into alternative layer 1s. And I think the riskiest investment into this spectrum would be investing directly into each applications. So venture capital funds are set up in a way that enable us to absorb the losses of investing into these platforms, because you're going to have very few investments once you do 50, 60, or 100 investments that are going to be successful and be beyond your dream successful. And the gains of these investments allow the fund again to absorb the losses of the 90% of companies that fail, that go to zero and never return capital.
I want to make a distinction here, and I want to draw attention to some things. When we talk about the, let's say, classical venture capital versus crypto or crypto-related venture capital, the crypto part has somehow perverted the world into thinking that just because you do the raise with tokens and with crypto, the same rules, the same metrics that apply in the traditional markets do not apply to it. So because somehow the stages of company development are somehow switched, because you are able to raise the money earlier on without really having a product that is valuable to customers, just because you're able to do that, you don't have to follow the same rules. And if we look back to the myriads of projects that were launched back in 2017, 2018, we'll see that I think that the returns of venture capital where 1 in 10 succeeds, we will see that there it's 1 in 1,000 or something like that. So this perversion of the funding cycle somehow makes people think that they have a more successful product than they usually have.
With all this being said, do you still prefer being a VC, or would you rather buy some Bitcoin and hold it for a couple of years?
I look at it strictly from the VC point of view. The crypto part, I'm very keen on it when I look into decoupling the finance from everything related to governments and states and any kind of centralized control. So if there is a project that really appeals to this side, then yes, that's interesting. Other than that, the same kind of rules should be followed as with traditional applications.
I think that this question very depends on the investment strategy. So you can invest in actives or in venture capital. In my point of view, the comparison for Web3 VC investments and the classical VC investments, that in crypto, the return of investment, they are shorter. And for the startups, it's easier to get money for today because the requirements from the VC to startups are lower. But the current market is great from my point of view for the investments, because right now the startups understand that they need the product, need a MVP, they need the financial model, business model. So we need to have that 3 or 4 years before the startup understood that they have to plan something. So I think right now is a good period to invest, so buy deep and sell high.
If I could add to that, actually, that's a very valid point. See, and what Felix was saying as well, the business fundamentals have not changed. So how a company makes money has not changed. It's not because we suddenly have an easier way, perhaps, to raise capital through tokens. Doesn't mean that the business has changed. So the real question here, and this is how we advise actually VCs as well into the tokenization process, is look at the business model, as you were saying. Look at how these companies are making money, or they're planning to make money. What is their business plan? How are they going to do it? Who's the team behind it? And then understand what are they going to do with that token. So if it's a utility token or a community token, what's the value of it within their ecosystem? Is it going to have a real purpose? There's a lot of tokens out there that we fail to understand as finance people, how they're sustaining their prices, because there's nothing behind them. But there are some real projects out there that have real value, even now and in the near future. For example, a lot of layer ones are working very hard into implementing technology that would really change a lot of things in the world of finance, in the world of the field of medical and government, for example, and governance as well. So those are the ones that have a real potential, because their tokens are going to have a real utility within an ecosystem. And it's simple. So business has not changed.
Now, I'll just reiterate, because I talk to a lot of Wall Street people, it's the tech people who get crypto and blockchain. It's not the Wall Street people who get it. I actually had dinner with a friend of mine, and she's on Wall Street, and I talked about how I think crypto could, someday be the world's currency system and spit out her wine. Like, I couldn't believe that I even would go there. But the people who are involved in this space and the VCs that are involved in this space believe this is like the Industrial Revolution. It really could change everything. The architecture is being built. They like the fact that it is a more equitable web, and you don't have big companies controlling everybody's data and making money off of it. They're very interested in that, attracted to that. I think they just want to see it mature a little bit more before putting some big cash there. And I'll just throw this out because I know we're only got a few more minutes. I did hear from a VC once say that he doesn't respond to any cold requests or for meetings. He believes if you're in this space, you should all know the same people. If you're really in the space and have a true business, he prefers a mutual introduction because he believes that if he's got a real business, we'll all know each other.
I think some great points are being made, and in the last couple of years we were fueled by heavy quantitative easing, in which simply put money was being printed, and these assets were fueled by cheap money, and that is why they rocketed. Now in the bear market, you can see a flight to quality. People now are looking at whether a protocol generates cash flow, whether a protocol is self-sustainable, and now we have the issues in which many crypto protocols only have runway maybe for 6 months, and other than that, they have no more capital to pay their employees. The macro situation has changed globally. We have had many issues, and now we have switched overall to quantitative tightening. Has this changed your framework when analyzing tokens? Is it changing the way that you look at them? Are you being more cautious?
It depends a little bit. I've discovered there are two main types of VCs. Those who are acting only in the crypto space, so they are trying to buy very cheap and immediately sell all the tokens, and they are performing this cycle many times. And other VCs that are investing in projects. So one of our clients who is a solid VC told us that crypto projects are like insects. The crypto and tech projects grow very fast, and he told me it's your job as a lawyer to discover and determine if they are able to operate in multiple jurisdictions in order to let me know if I can transform that insect in an elephant, because an elephant has a longer period of life. So there are insects, they raise money very fast, they spend all of them, they issue token, they're ready to be on the market. But if you see them like this, they're going to die very fast, like a butterfly. Yeah? So I'm able to transform them in an elephant. Please tell me if, based on the actual and future, as you can anticipate, regulation, I'm able to transform them in an elephant, and they have a real utility which can be implemented in multiple jurisdictions.
Going back to your question, I think it would be unwise to consider that as of yet, what happens in the, let's call, fiat world does not impact what happens in the crypto world. And the bad part about the crypto world, and this goes a bit into what Sergiu was saying, is the crypto world, because the speed of the information and the speed of value transfer is very big, things tend to happen at a much higher speed than in the fiat world. And what we see today in the fiat world, it's a consequence of what happened 2 or 3 years ago when the COVID started and all the governments printed money.
So from the VC side, it depends on how freshly launched the VC is. So if the fund raised in 2020 and is 75% deployed, most likely all of that money is right now underwater, or the companies are just withholding from launching the token. So what I've seen is some of the VCs have, let's say, 25% of their fund left to deploy, and then because 75% is underwater, they might be tempted to take outside risk to make up for the 75% that is underwater. So I think there's going to be a gap between funds that recently raised. Right now, raising is 10 times more difficult to raise for the riskiest part of the spectrum for asset classes. But I think that plus the added levels of diligence that have been, of course, improved throughout the last 2 years after everything that happened. For example, in our case, we are doing something we didn't do before, which is interviews with the technology team, with each of their developers, looking into it deeply. And before, there was just an excess of opportunity and greed, where diligence was a bit lighter. So I think it's overall good. And it's going to be more difficult for everyone to raise money if you're a founder or if you're a VC.
We have 1 minute left. Does anyone have any questions about VC investments, about the difference between traditional finance and crypto? If not, then I will ask very quickly, we have 1 minute left, if you can give one advice either for investors or for VC companies, for startups, what would that be?
So the advice for the startups, build the products for final users and think outside the Web3 box. So build what, try to make the bridge for outside market to the current market.
Probably also look at the industries that make sense when it comes to having tokenization in communities. For example, sports, entertainment, gaming, things that gather large amounts of people that come together. Those projects usually will tend to have a bit bigger adoption because they will have a bigger user base.
I think one way to manage risk but still get exposure to a niche part of the industry is investing into the market structure, meaning, let's say I would compare a TV and film example. It is way more difficult to hit it investing into one movie, and the chances of that, being a $1 billion movie like an Avatar versus investing into a platform where every movie is going to trade. So I think that investing into the market structures where all of these assets are going to trade, if it's an NFT marketplace, a music app, a sports app, so wherever you think that is going, you're going to manage risk by doing that.
I only have two propositions. If you are a startup, think just because you can raise money doesn't mean that you should raise money. And if you are a VC, just because you can invest doesn't mean you should invest.
That's an excellent point right there.
Yeah, and from our side, we have a question there. For startups, you must identify a problem, even if it's a small one, and solve it. Be the best who solved it, because the chicken did this, and thanks to her, you are able to eat the omelet. Yeah.
I'll just say real quick, think about the customer, make it as easy for them to use as possible. I think that friction creates a lot of problems in this industry, and meet as many people as you can.
Can we have one question, please? I know we're running late. Yeah.
Good evening, thank you. I promise the question will be short. I hope the answer will be as shorter. I understood the standpoint of traditional VCs and, let's say, new age VCs, but I would want to comprehend your vision on DAOs and how these will actually be the new form and new wave of opposing, let's say, the trends of the past. Thank you.
I will venture a guess here. The DAOs, as they are today, they are not ready to do whatever they are. We aim them to be doing.
I've changed my advice. The initial advice was don't trust DAOs. DAO doesn't exist. So, actually, DAO exists from the technical perspective. From the legal perspective, you are liable for what you are doing. There are some sandboxes in Wyoming and in Switzerland, but there are pre-approved companies to enter in those sandboxes and operate in specific frames. DAO doesn't exist from the legal point of view. You are liable as a deployer of that smart contract.
Also on the positive side, legal framework is being done towards DAOs. It will not happen immediately. Wyoming last year was the first state in the US to legalize DAOs, so there is progress being made, but it's not necessarily taken into account in the near future, but over a 10-year period for sure. Thank you very much for having us.
Fantastic, thank you so much. Wonderful. If you'd like to make your way off that side there, just to your left.